At the very backbone of modern retail strategy, FinTech innovations in retail banking, a practical implementation guide. For a bank executive, the challenge isn't knowing what FinTech is, it is knowing we are privileged to have with us a true veteran of the industry, Shri Sunil Soni. We just to inform you that we will have a dedicated question and answer session immediately following his talk. I invite Shri Sunil Soni ji to take us through today's masterclass. Over to Soni sir.
It is apt to say that, with the current direction which the country is taking, the fintechs are playing a great role. The legacy systems that we have deployed gather more wallet share, and then eventually, get into building business for the organization. Gone is the era when we would see the NIMs starting from say 4% till about say 3.7%, and we were so happy, yet struggling to see that in case if we could increase and improve it above 4. It is necessary for us to see how we can improvise onto the profitability of the bank and see how can we augment the profitability, how can we augment or continue to strengthen our agility so that we stay for another 100 years in the business. Bringing this aspect into play is that the fintech, so two aspects, we are switching from the traditional method of banking to, right? And trust me, unlike our core banking systems, which were built decades ago, people who are more acclimatized with the technology and are in a process to, so these solutions, they provide you with those kind of enablements and, kind of uh, push us to reimagine the processes to eliminate friction, because we are more concerned, bankers are more concerned with regard to, creating or maintaining or improvising on the balance sheets. Having said this, uh, what I can always say is that in 2026, fintech has actually matured beyond the simple P2P apps. What are the new ways in which uh, things can be addressed? Banking is one of them, which is basically, uh, so most fintechs today, they partner with banks and they offer banking through BaaS models, which is called banking as a service model. Now, in case if you're looking at banking, so now uh, AI is at the core of the technology-enabled changes. Uh, this aims to improve customer experience. Similarly, we expand access to the financial services and enable a personalized offering to the people. Is that these things are resulting into new applications. If you look at the innovation, which is actually happening in the banking, so banking innovation technology, in today's context, when I say the innovation, it is increasingly emphasizing the customer centricity, because the monolith systems were created and increased deployment and increased interaction of the customers with the bank. So while you look at all these elements, so there it basically enables us to balance the risk. Now look at the way the remittances were being made then and the remittances are being made today. But while we are providing all this, especially those who are old, gullible, or does not really understand the technology to that great extent. Now, what are the kind of causative factors or the key drivers for all this? So we are looking at a very high smartphone penetration today. We are also looking at the embedded finance, which is being so major fintech innovations. In case if we see in retail banking, UPI and advanced payments. So the enablements or innovations which we can see is credit on UPI actually can actually help with regard to uh, now this circle is kind of on two counts. There the members are given some limits. So this is where you can create a limit, right? These are primarily for those areas where the connectivity is low, where the penetration is just on block phones rather than the smartphones. So there they can actually still be empaneled, enrolled into the UPI. Now, if you look at some practical examples, not every bank is expected to create a model, an API, whereas a single API is being now consumed by people at large. obviously with consent, because without consent you can't really do anything today, offered the microloans in this basis their transaction history. From a traditional collateral based, flow based loans, there is a unified lending interface also which is happening on 2 3 counts. One, you already have a database with you, and finally you end up having lesser delinquencies in the loans which have been given. Now, while we say e-commerce platforms, wallets, or it could be your cards, these gig platforms basically are for, or banks, they partner with NBFCs. One is expected to integrate with the accounts aggregator framework, identifying in case if he is capable, or if he is good to be advanced with some bank's money. The success, if the advance which has been given is going to be successfully returned, or going to be returned by the person whom you finance. Now, instant disbursals are also part of this entire character. So provide the credit to the customers, no auto top-ups as we call it. So we are trying to boost. Now, in the digital banks, we don't have any of the humans who are actually offering, or there are absolutely minuscule amount of people who are there. There are no physical branches. The advantage here is that the onboarding is, third is the advantage that the costing which gets reduced for the bank is being offered. Part of it is being offered to the customer in the shape of increased interest. The agility with which they function, right? So they sense the market, the increased customer acquisition, and a quick response time is being looked into by the neobanks, right? So while we do this, there is another aspect which is the integration of embedded finance, where these gig workers are also getting the finance, AI or ML driven personalization and reg tech. There was a time when the chatbots were fed with the structured questions, not anymore. Today, they learn from not only from your behavior, but they also learn from the activities and behavior of all other customers as well, who are akin to you, are basically measuring the biometrical or behavioral, biometrics. They reflect. So these, practical implementation actually helps you. So apt is to say that the introduction of AI and ML, which is becoming agentic, because these things are being also used for identifying the cyber threats as well. The outside and inside limits are being, kind of bound. Uh, Insurtechs, which are the micro insurance apps, which are mushrooming now. The WealthTech app, where this tokenization is primarily breaking your asset into smaller investable funds. Practically for you, it doesn't really mean much, but from a perspective that you are having another aspect of investment which is coming to you. However, they are the ones who are actually offering these tokens for investments, programmable to an extent where the vectors on which this currency can be used. This can be programmed on time. This can be programmed on geography. This can be programmed on ownership. This can also be programmed on the encashments. So when you mix and match them, we are also looking at containing or controlling the risk factor also in this by actually looking at the compliance. And what they're giving you is instant EMI, retail without building in-house, on co-branding the RuPay or Visa credit cards linking to UPI. ICICI Bank has, it is coupled with the Neo. RDFC First Bank has, it forms the API alliance with Neo leaders or Neo lenders and PayU. The efficacy of fintechs by the banks. Now, this implementation, for example, in Southeast Asia, with the help of government supports, are digitally included. It is apt to see and look at the projections and aligned with them, followed by lending and other services in India. What is happening here is that people have en masse onboarded on account of these enablements. So today, the banking, the payment, the insurance, and everything is getting aggregated in the remittances panel. However, the charges were far too much. But today, look at some apps which are offering you these services at minuscule payments. Payment as less as about less than 1,000 rupees, and they'll send across any amount of payment that you would want across border with not much charges. Another aspect is with regard to embedded finance, where we are looking at which becomes the fastest growing segment, is buy now, pay later. We are looking also, trying to see that the personalization is one key, the fraud detection is another. So while blockchain use cases are being explored by the banks, so this becomes one. Another aspect which is very keenly becoming the point which is being used by the bankers is basically tokenization of assets now, especially in the rural areas. There is a shift of maturity, from growth at all costs to sustainable models is what is the current mantra. So all these countries, all these banks, all these offerings are today looking at the sustainable models, because the challenges and outlook are the areas which would require addressal there for the overall well-being of the financial systems. Bring about a newness into the banking technology which is required. Two, three things which are there. One is the change in the behavior of the young. So today, the world is looking towards India in the shape of provider for various type of technological needs, the assistance by the people, and also now the infrastructure, which the bankers have. The neobanks or the no physical branches, no physical branch banks. So there is uh, there is an aspect where we need to bring banking insurances, where they immediately look at at the time of checkouts, they actually help you understand in case if you'd like to pay in EMIs, if you'd like to pay in bits and parts, if you'd like to do. So there you have the enablements from where the payments can be received. And we are also looking at the stable coins Singapore options, where the enterprise cross-border uh, is being paid. The learning has to be there, which is there today, and need for automating or making autonomous decision making as part of banking. We are looking at the uh, tokenized assets. Straits X, as we call it, the SGD, as we call, which is Singapore digital currency, is pegged for the use of digital currency across the the geography to containment, and is used real time and can also be analyzed for the purpose of understanding the behavior in a booming economy is about anything between 2.5 to 3% of the bank's total funds. However, for these automated models, this is as good as 0.5% to 0.7%. Where it is resulting into higher transaction volumes and the increased deposits. We are looking at the real-time processing. It requires a lot of time and also it has constraint because the conventional systems are not fully capable of bringing about these new changes. So apt is to say that these innovations, they have driven inclusion. Today is the time for collaboration. And my own submission is that in case if the banks collaborate faster.
For that masterfully structured presentation. Now, before we open the floor to general audience for questions, we are honored to have several of our esteemed mentors and a CEO of IBA, and he will be followed by Dr. Virendra Bhoi, a former head of.
Now, I will give 2-3 problems, which was luckily mentored by me. Go through that document, see that what your bank is actually, because every year the evaluation is done of the banks on their performance on the ease. So pick up the ease date document. In fact, after reading that, now I am also requested Union Bank of India to give me the ease document. My colleague
say give my feedback. It's a feedback, sometimes, and even if we had the AI summit recently, the issues that I am raising, only 2-3 issues I am raising, not more. Now, when we are adopting technology, still some safeguards are there. Why I am telling, the whole thing is, if it will replace people, we feel that fintechs they are green finance and not destroying the environment. Progress we cannot compromise. We have to take care of people for inclusive growth, and planet anyway is a future risk. Respond in a responsible manner. Why I am telling now, coming to you know neobanks, etc. These are all digital only banks. Are we exposing the system little too heavily towards some kind of a crisis? You can tokenize your cards also, but when there is no asset, so these are some of the things which I wanted to flag. Probably these are very forward looking. One more thing, then other person is Vivek Raghavan, 105 billion parameter, or you will develop your own product. So sovereign AI is definitely necessary because you would like to use.
I would like to request you to address that. In the Indian economy, it has crossed 40 lakh rupees.
Which simply says that the humans, this is what they're trying to say with regard to adoption at a greater level, and from a perspective of not allowing AI to become our masters. Third thing with what you said is with regard to the use of GPUs, more use of GPUs, because we are looking at becoming carbon neutral by 2070, and we are also looking at creating more data centers here, so green energies as we call it. So today, I think RBI has only indicated with regard to outsourcing. Said with regard to sovereign AI, I think that's the current direction what most of the nations are trying to look at.
He is Mr. Shankar. He is from Bank of America, I think.
And secondly, while you look at that, so there are some basic material which is available with the CICs, which is being provided to you. But here, so instead of that, now the AA model helps you to identify strength of the or net means of the borrower.
It was regarding the cash in the economy, that it has also crossed
Paradox.
40 lakh while the transactions are also increasing. So paradox is there.
But nevertheless, currency to GDP ratio has fallen marginally. Illegal transaction, still cash transactions are dominating. So that is where actually this is not the responsibility of the banking community. Corruption has to be reduced by governance.
So we'll have to
Yes, cash payment or digital payment. So the doctor will charge accordingly. Anyway, these are some of the issues which are responsible for not cash transaction or circulation, cash in currency in circulation as percentage to GDP is falling gradually.
And on behalf of Elite Bankers Club, I would like to extend our deepest gratitude to Shri Sunil Soni, VOCA.